founded in 2007 after the merger of Sime Darby, Gertrude and Gordon Home. Even though the company was officially formed in 2007, it actually has more than 50 years of experience in property development. The company focuses on residential, commercial and industrial development. Besides that, it also involves in investment and asset management such as shopping mall, logistic hub and industrial park. Sime Darby Property also own leisure properties including the well-known Kuala Lumpur Golf and Country Club. Over the years, the company has delivered more than 100,000 homes and currently manages 25 active townships in states such as Selangor, Negeri Sembilan and Johor. Internationally, it is also part of the redevelopment of the Battersea Power Station in London, which is one of the largest regeneration projects in Europe. Financially, Sime Darby Property is very strong. In 2024, it recorded revenue of 4.3 billion and profit before tax of 780 billion. The company also reported total asset of 60.5 billion and a market capitalization of 11.5 billion. This shows its strong position as one of the leading property developer in Malaysia. Sime Darby Property shows the importance of balancing both tax and zakat. Tax is a legal obligation under the Income Tax Act 1967. The government used tax money to fund schools, hospitals, roads and transport. Tax policy also support economic growth by giving incentive and helping companies improve productivity through training and upgrading equipment. For businesses, good tax planning reduce costs, avoid penalties and ensure compliance. Zakat is a religious duty in Islam and one of the 5 pillars. It is compulsory for Muslims including companies that qualify. Zakat purify wealth, encourage generosity and help reduce inequality by supporting the poor and needy. By managing both effectively, Sime Darby Properties stay financially strong and boosts a good reputation as a responsible corporate leader.
Assalamualaikum to Dr. Labani Huda. My name is Nurjulaita binti Abdullah and I will present about the financial implications of Sime Darby Property Berhad tax payable for the year 2024. For this year, the company report a tax payable of RM 258.9 million along with the zakat contributions of 3.5 million as disclosed in the integrated annual report. According to note 16 on the taxation, the total tax expenses is 262 million and the difference of about 30 million arose mainly because certain income was subject to real property gain tax at 30% instead of the standard corporate tax of 24%. Now, what this means for the company? There are 5 key financial implications. First, Sime Darby Property face a higher effective tax burden although Malaysia corporate tax rate is 24%. RPGT on a property disposal push the effective tax rate slightly higher, which reflect the structural risk faced in the property development industry. Second, the company RPGT exposure creates an additional cost and makes its tax payments more volatile since selling property is core to their business. This is an unavoidable risk that affects a long-term profitability. Third, there was a tax over provision of RM 7 million from the previous year. While this helped reduce the current year tax expenses, it is only one-time adjustment and cannot be relied on as a permanent tax saving strategy. Fourth, the company made a use of RM 22 million of deferred tax asset. This asset, which come from past losses and timing differences, help lower the current year tax expenses. However, they are limited in nature and cannot be counted on every year. Finally, the impact on profit and cash flow. After including all these adjustments, the tax expenses of RM 262 million reduced the company's net profit after tax. This directly affects how much can be reinvested into project or distribute as dividend. In addition, the high tax payment strained the company's cash flow, leaving a less liquidity for operation and future growth. In short, while over-provision and deferred tax asset provided some relief, the higher RPGT exposure significantly increased the Sime Darby property tax burden and affect both profitability and liquidity. That's all from me. Thank you.
Next, I will explain about the discussion of Sime Darby Properties Berhad tax computation. Firstly, is statutory corporate tax rate. Under the Income Tax Act 1967, the standard corporate tax rate in Malaysia is 24% on chargeable income. In Sime Darby's adjusted income was primarily taxed at this rate, yielding 239.3 million. However, the amount we found in the adjustment was 997.1 million, which shows an increase. Secondly, is real property gain tax rate or RPGT. RPGT rate rates can be higher than the standard corporate tax rate. And according to the adjustment, Sime Darby have total of 13.1 million RPGT, which increasing Sime Darby effective tax liability. Third is non-deductible expenses. Sime Darby added back 48.7 million ringgit in such items including depreciation and amortization, internal reorganization costs, and other expenses such as general provision or donation. Next is non-taxable income. Certain categories of income are exempt from tax, hence deducted from adjusted income. For example, foreign currency exchange gain, which is 2.9 million, gain on dilution of JV interest, which is 2.5 million, and other non-taxable item, which is 5.8 million. Finally is effective tax rate. Although the statutory rate is 24%, Sime Darby effective tax rate is higher due to RPGT and disallowable expenses. Thus, the ETR rate is equal to 32% above the standard. In conclusion, Sime Darby tax liability reflect not just the flat corporate rate of 24%, but also specific adjustment under Malaysian tax law.
Next, my name is Nur Alisa Sofia. I will present about Zakat with a focus on Sime Darby. Firstly, Zakat is not only a religious obligation but also a strategic financial tool. According to Section 44(11)(a), Zakat payments are deductible from gross income. This means Zakat directly reduces taxable income. For example, imagine Sime Darby has a gross income of 800 million. If they don't pay Zakat, the whole 800 million is taxable. But if Sime Darby pays 50 million ringgit zakat, this amount is deducted first from income before tax. So taxable income become 785 million ringgit. So we can see that zakat is not only about ibadah but also a smart financial move. Next, let's look at the nisab and rate of zakat. The nisab is the minimum wealth threshold based on the value of 85 grams of gold. In Selangor, Lembaga Zakat Selangor updates this every 6 months using Bank Negara. For July to December 2025, the nisab is set at 35,449 ringgit. Meanwhile, the zakat rate for both wealth and business zakat is 2.5%, which is the standard rate applied by Lembaga Zakat Selangor. For corporations like Sime Darby, zakat falls under zakat on wealth, specifically business zakat. In Malaysia, zakat authorities use two methods, the net working capital method, which is the most common, and the adjusted net profit method. Both apply the 2.5% rate. Finally, zakat is different from normal corporate social responsibility because in the Al-Quran specifies that fund must go to the 8 asnaf categories. For example, Sime Darby Property contributed 3.5 million zakat in financial year 2024 through Lembaga Zakat Selangor, which then these funds were used for programs such as education, healthcare and other social development programs. Sime Darby was even listed in the Pribumi Bursa Malaysia Zakat Index, proving its commitment to corporate social responsibility through zakat. That's all from me. Thank you.
Assalamualaikum everyone. My name is Siti Binti Muhammad Darby. Now, I will explain how tax and zakat work for a company like Sime Darby Property and how they affect payment, cash flow, and also legal duties. First, about the payment. Before paying zakat, the company had to pay about 262.4 million ringgit in tax. They paid 3.5 million ringgit in zakat, so their tax dropped to 258.9 million ringgit. In total, they still paid 262.4 million ringgit. This split between tax and zakat. So, zakat doesn't add extra cost. It just changes where part of the money goes. Next, cash flow. Because zakat lowers the tax amount, the total payment stays the same. The difference is some of the money goes to help the community through zakat. This makes the cash flow easier to plan while also showing social responsibility. And for legal compliance, tax is something every company must pay under Malaysian law. If they don't, they can face serious penalties like fines, late payment interest, or even legal action from Lembaga Hasil Dalam Negeri (LHDN). Zakat is a religious duty in Islam, and here in Malaysia, it is accepted as a tax credit. So, by paying both, Sime Darby Property follows the law and also fulfills its religious duty, which helps build positive corporate image. In short, tax funds public services like schools and roads, while Zakat helps the poor and support the community. And because Zakat reduces tax, companies don't pay double. They just split the same amount between the two. This approach also shows that a company can be financially smart while still caring for society. It creates long-term trust with the public, which is important for the company's growth and reputation. That's all from me. Thank you.
Next, I will be presenting about recommendation for Sime Darby Property based on its current tax and financial situation. First, Sime Darby Property should strengthen its tax planning. This means making full use of available incentives such as for green buildings, affordable housing, and industrial projects. By doing this, the company can lower its tax burden, increase profit, and avoid unexpected problems. Strong tax planning also shows investors that the company has sound financial management. Second, the company should enhance awareness and compliance training for both management and employees. These training programs will help staff understand Malaysia's tax and Zakat system better. By doing so, the company can prevent mistakes, avoid penalties, and ensure correct payments. At the same time, it promotes an ethical and socially responsible culture within the organization. Third, transparency in reporting should be improved. By clearly disclosing Zakat and tax contribution, Sime Darby Property can build trust with shareholders, the government, and the public. Transparent reporting also strengthens the company's image as a responsible organization that contributes to community and national. Lastly, Sime Darby Property should align its internal policies with both regulatory requirements and Sharia principles. This step will strengthen corporate governance, reduce risk, and ensure compliance with both legal and Islamic standards. It is also position the company as a sustainable and ethical leader in this industry, ensuring a long-term growth and success. So in conclusion, these four recommendations will not only help Sime Darby Property manage its tax obligation more effectively, but also build a stronger reputation as a responsible and ethical company. By implementing these measures, the company can achieve both financial stability and long-term sustainability. Thank you.
In conclusion, Sime Darby Property Berhad, with more than 50 years of experience and strong financial results, is a clear example of how company can balance both tax and Zakat obligation. Tax under the Income Tax Act 1967 is a legal requirement that funds schools, hospital, infrastructure, and also support investment and productivity through government policy. Zakat, on the other hand, is an Islamic obligation that provides wealth, helps the poor and needy, and promotes social justice. In Malaysia, Zakat is recognized as a tax rebate, which means companies like Sime Darby Property can fulfill both duties without increasing total cash outflow. For Sime Darby Property, this approach not only ensures compliance and financial stability, but also strengthens its social responsibility, support community development, and enhance its reputation as an ethical and responsible corporate leader.